What's up, guys? It's Rob here, and we need to talk about Vinco Ventures, ticker symbol BBIG, because this stock is blowing up lately, and people need to know actually some very important information, not just regarding it, but all trades that they're taking with any of these meme stocks. There's some very important information that I have for you guys. So let's look at the chart and take a look at what's been going on lately. We can see that we're actually a bit down on the day, but we are still near relatively high prices, right? All-time highs, essentially. Over the past couple of days, we've been making them, and we have subsided a little bit, but this is by no means a crash in the stock price, right? Because we started around $2, and just yesterday we were at $12.49, but only for a brief second, and now we are around $9.86, so almost 10. And $10 is actually a very important price point for BBIG because you can see on the September 17th strike date, we have 31,000 open interest call options on September 17th for the $10 strike price. So that's going to be a big price point that institutions are really going to try to push us below. But that's not what we have to talk about today. What we have to talk about today is how to properly manage this trade and how to protect your capital and make sure that you actually accrue as much capital from this trade as possible. So if you're looking at the chart, you have to realize that this stock has already run up quite a bit. And let's zoom out a little bit. You can see, we've just about 10x, right? From $2 to $10, we've about 5x. And a lot of people are probably thinking that this will go a lot higher because the short interest is still very high and the gamma squeeze is very possible. And it likely will go higher, in my opinion. However, what you have to do whenever you're taking any kind of trade is you have to think about where you're going to cut your losses if the trade goes south. Now, I know a lot of people want to be diamond hands all the time. However, that can often, especially with these short squeezes, lead to massive losses. So what I like to do when I'm trading is figure out a price point where if this stock drops below that price point, I'm out. And I know a lot of people are going to call me paper hands for that, but when I'm trading, I like to do it in an intelligent way instead of just blindly holding a stock, hoping that it will go up. And if the trade stops going my way, then I'll often cut my losses at a certain point and look to re-enter when the stock looks like it's more likely to rally. I think that's a good way to protect your capital. And I will tell you, when I've done this in the past, it's actually ended up much better for me than when I haven't. Now, this is just one part of the very important thing that I have to tell you. So, you could decide whatever price you want to be your stop loss, right? Based off of your personal convictions on this stock. If you think that it won't drop below $6, then something that can be very helpful to do is literally find a charting platform like Thinkorswim, TD Ameritrade, that's what I'm using right now, and literally draw a line on the chart and say, hey, if it drops below this line, that's when I'm out. Or, you could choose whatever price you want, really. Like, it could be $5, or you could even say $0, right? $0 is where I'm going to sell this. I'm going to hold it forever. But it's very important to actually come up with a price in your mind, I think, because a lot of people, I believe, think they're going to cut their losses, and then they don't actually end up cutting their losses. They see massive downtrends on a stock, and they think, oh, well, it's going to rebound, and I've already lost so much money, I may as well hold on. And that oftentimes ends up leading to them losing even more money. So I really think it's important to come up with some kind of stop loss, even if it's only $1 or $2. Now, in the case of BBIG, I don't think $1 or $2 is a good stop loss for this. I think at that point, it is worth holding again because that is returning to previous price points that this stock was at before the massive pump. And I think that once you return to those points, it doesn't really make sense to sell the investment because it's actually more likely to rally above that point than to sink below what it was at before the short squeeze and before it got all this attention. So another thing, and really this is actually the most important thing that you can do when trading, because I know a lot of people, especially these meme stock traders who have been very successful in the past, at least partially, right? They've been very successful in picking these stocks and buying into them. But what I don't think they've been very successful in is actually taking profits on a stock. And that's what I'm going to talk about right now, because I think taking profits is probably the most important part of actually trading, because it's very easy to get caught up in the hype of something and think that it will go up forever, but nothing can actually go up forever. So, especially with the squeeze situation like this, eventually, right, even if the squeeze is successful and this thing, 10 or 20 X's, it will have to come down at some point to reflect the fundamentals of the company, and it won't remain at all-time highs forever. So what's very important is actually choosing a price point where you think this stock is going to go to and deciding to sell at that point. So, likely for this, it will be going much higher. So you could choose a price that's very high. You could say, hey, maybe I want this thing to go to $30, and at that point, I'm okay selling it. Or if you think it's going high, you could say $70. I'll sell there. But it's very important that you don't just get caught up in the hype, because what I've found with other stocks, if you look at things like GME, I believe that a lot of retail investors were holding this thing. They may have bought around 10, 20, 30, 40, even 50, 60, $70. And when this thing was pumping up, they had no idea when they were going to sell. They didn't have a price in mind, and they just kept buying into it. And they actually may have ended up losing money, especially if they were buying at these higher prices. This thing went from 150 to 480. And a lot of traders probably didn't have a price in mind of when they wanted to sell. So, you could mark it off as $200 or $300, and that would be fine. And you would have sold at that point. But a lot of people likely didn't. A lot of people likely just held right through and experienced the crash. Now, I know that with GME, a lot of people think that the squeeze has not happened yet, that this thing's going to 5,000, and perhaps it will. But you have to accept that on this chart at least, you see that there are uptrends and downtrends and pumps and crashes essentially. So I think that it's very useful to decide where do you think it's going on this pump. That's a good way to think about it. And you can even do the same with BBIG. You can look and say, hey, this thing pumped up from $1 to around $10, and maybe that was a good point to sell and then re-enter later after the price had crashed, because oftentimes these things do not move linearly. The stock market is not that easy to predict. And if it was, then the market would change itself to not reflect such an easy pattern, right? So I think that it's very important to decide where you think it's going on this pump and be realistic about it too. If you think it's going to $100 on this pump before, it has any kind of pullback, significant pullback, I don't know about that. I think that this thing could trade up and trade down as institutions try to counter retail, and that could potentially be creating some good trading patterns to take advantage of, but only if you actually have these price points in mind and decide where to buy and sell. And you guys have to do that for yourselves based off of your own risk tolerance and your own personal convictions on this stock. So that's what I have for you guys today. If you've enjoyed this video, then please consider liking and subscribing to the channel. And one other thing I will say about BBIG actually is I know a lot of people are running low on capital at this point. They may have put a lot of their money into these meme stocks and they don't have that much capital left. And something that you can actually do if you're interested in getting more capital to trade these stocks is go down to the description of any one of my videos, or likely the pinned comment as well. And there's a Webull referral link that you can use. You don't even have to deposit any money, but you get one free stock valued up to $300 just for signing up. And then you get a second free stock valued up to $2,000 for putting in a $5 deposit. So that's a good way to get some extra capital. As soon as those stocks come in, you can sell them and potentially buy BBIG or whatever you want with it, or just turn it into cash, take it to the bank, take it out of the bank, and buy some food, whatever you want with it. So that's what I have for you guys. I hope you've enjoyed this video. Thank you for watching. I'll see you in the next one. Bye.